Recession odds are melting faster than an ice cube on a summer day. At least that's what the former Dallas Fed chief says. Former Dallas Fed President Richard Kaplan delivers a surprisingly upbeat verdict. The probability of a recession is shrinking. But beware, smooth sailing can hide rocky shoals beneath.
There's a market reaction, obviously, in oil. You see gold spiking. I'd say the equity market reactions are somewhat muted. The 10-year, interestingly, the treasury market reaction is somewhat muted. Normally, you'd see greater flight to quality. So I think the markets are sort of in a wait-and-see mode, muted initial reaction, and I think the Fed will just watch this carefully day to day to see if it's going to be contained or there are going to be a further escalation. But they'll watch it like the rest of us. They'll watch it day to day.
What did you make at this point, back to what we were going to talk about, what did you make of the latest inflation numbers? They're positive, obviously, but is it the calm before the storm in your view? Well,
it tells you a couple things. One, it tells you if it weren't for the tariff situation, we're in a disinflating situation. We're in a disinflating world, and I think if it weren't for these prospective tariffs that will flow through and are flowing through, I think the Fed would be on their front foot to be looking to cut rates now. That's the first thing it tells me. And then the second thing is that they're going to watch how these tariffs, where they're set in the next several weeks, how they flow through the economy. But I think if I were at the Fed, it would encourage me that after we get over the horizon, maybe the tariff impact could be more muted than I fear, and that over the horizon, I think the world by and large has got an oversupply of goods that's driven heavily by China, and maybe we can get back to taking action sometime during the fall. But I would want to keep my options open, but that's what I would take from these numbers.
So at this point, if the tariffs, we've got delays, we've got respites, we've got things like that, if those are extended or if it wouldn't accelerate from here, are you convinced that that tariffs become something that should stay on the Fed's radar, or would you be more concerned with some of the uncertainty surrounding it and what it does to growth concerns?
Well, we've already seen a lot of the negative growth impact, I think, in terms of just the pause in corporate behavior, corporate investing, and consumer behavior. So we're already seeing that. I think if I were at the Fed, I'd be thinking and reminding myself that ideally these will be a one-time cost shock. I'll also be reminded that in a world of overcapacity for goods, even with this, companies will have negotiating leverage over suppliers to push prices down. They may have to take some out of margin. They may have to put some in prices. So if I were at the Fed, I would say the height of uncertainty about the impact is in the next several months. And over the horizon, as I said, I think a lot of the other trends lead me to believe that we can maybe resume our march toward our 2% goal later this year into next year. And so the height of the uncertainty is we're probably in the middle of it right now.
You saw some of the Fed futures yesterday, kind of surprising, maybe not surprising, but can those change the first a month from now? If we got hotter numbers, do we go back down? Do you think what's your outlook?
Well, directionally, what I'd make is the Fed futures is the first meeting where there's a real meaningful probability of a cut is September. So what I take from it, which I think is about right, that no action in June, unlikely in July. The Fed, though, it will likely prepare itself and prepare in its comments that it might take action into the fall. But we still don't know what the tariff rates are. And we still have a budget bill and a tax bill that has not yet been passed. And we'll see over the summer what the details of that are. And so it just tells you that the summer is going to be spent processing this. Obviously, there'll be tension in certain parties wanting the Fed to take action sooner. And I think the Fed will be on its front foot, but it's got to understand what the facts are on tariffs and how they flow through. And I think it still needs a little bit more information in order to see that situation clarify.
Rob, if you were on the Fed, would you really be looking at the details of the big, beautiful bill? Would that have any influence on whether you cut rates or left rates the same?
The main things I'd be looking at are well, two things. Number one, we're going on the margin from more government-directed spending, American Rescue Act, Inflation Reduction Act, Infrastructure CHIPS Act, very directed, to less of that. And to the extent we're going to run deficits, it's more tax-related, more money in people's pockets, which I think will be less inflationary. So that's one thing I will take from it than maybe the previous approach. And then the second comment would be, I started the year thinking that deficits would likely be going down and the budget fiscal might be contractionary. And we're now getting to the point it may be neutral or expansionary. So it reduces my thought that we're going to have a recession. I think probabilities of recession are going down. We're in a relatively tight job market. Companies they're not hiring as much, but they're also not firing because the job market's so tight. So all of that makes me believe that we're going to have some growth stability, sluggish but stable. And my main focus ought to be on seeing how these tariffs will flow through, and then getting myself ready to potentially take action.